I feel like buybacks are good investments when the market doesn't care about them. Like right now, buybacks are probably pretty good because token prices are depressed a lot. You're buying back tokens for pretty cheap, but no one really cares about buybacks right now. Like they're trying to find whatever the hot narrative is. And, like many months ago when things were super hot and you had like some dexes on Solana and other protocols that were buying back the token, like when they would announce that, it would have a big impact on the price. And people seem to really appreciate that. But the token price was like super high at that time. So from the investment standpoint, it's not super great.
This episode is brought to you by Sablier, the leading on-chain solution for token distribution. You'll hear more about them later on in today's episode. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of Lightspeed, our weekly roundup episode. Today, a little bit of a mix-up. We've got Lucas from Jito joining us for what's normally the in-house Blockworks roundup for Lightspeed, alongside my typical co-host here, Carlos. How are we doing today, guys?
So pretty good. Happy New Year.
Yeah, doing great. Excited for this episode.
Happy New Year. Welcome everyone to 2026. If you weren't paying attention, happy to have you on today, Lucas. We'll wanted to chat about a new dashboard and some new data and research you guys have been digging into over there at Jito. So we'll talk about that. And then I think on the back half of this episode, dig into, there's a bit of a buyback debate that's been going around the community again. It feels like we go through this one every 6 to 12 months, and we're back at it again. So we'll chat on that later. But maybe to kick things off, I want to talk about IBRL. Pretty common topic for the Solana space. I guess you just dropped a new dashboard and some metrics around validators and really like a block explorer essentially that digs into some things. I guess can you give background there and then we'll dive into it.
Yeah. So we started looking into a lot of block packing metrics in like middle of last year on Solana. So how are the blocks being built? How are the transactions being sequenced? Are there any like funny games that are going on or things that are maybe not necessarily Solana aligned? And, as you mentioned earlier, IBRL is a common saying in Solana. It means increased bandwidth, reduced latency. This particular, at least this version of the dashboard, is mainly focused on reducing latency. So, when we started looking at the data, we wanted to look at how the blocks are being packed, and none of the current explorers really go into that. So, if you go to SoulScan or you go to Orb or the Solana Explorer, you can just pull up a block and you just see all the transactions. And they're kind of just like, it's like, here's just like a blob of transactions that were in the block. And basically in every network except for Solana, that's how the network works. So on Ethereum, in a lot of these L2s, they emit the entire block at the same time. And so like it literally is a blob of transactions. On Solana, it's built differently. It's like the transactions are streamed out as the block producer is executing them. So there's no wait 400 milliseconds and emit the whole thing. As the block producer or the leader or the person producing the next block, you can basically emit transactions anywhere in that 400 milliseconds. And what we started to discover is that there's some validators that are kind of backweighting the transaction packing. So it might be easiest to like walk through this, what this kind of looks like if you want to pull up the dashboard here. But let's just pull up like Helios's validator. They have a pretty high score here. So you can scroll down. You can see this recent block here. This is just from some epoch here. So we're actually looking at, this is slot 391391943. And this is that single slot for that block that was produced here. And you see the 1 to 64 on the bottom. Those are basically like time slices in proof of history on Solana. Essentially, each window is like 6 milliseconds on Solana. So you can see how transactions were packed within each 6 millisecond time window in this particular slot here. So the gray is votes, transactions or votes on Solana. Green is non-votes here. So yeah, you can like scroll. If you go to previous, you can see some of the previous slots that they made in the same epoch. You know, you can kind of see the green spread throughout the slot. This is kind of what we want to see. Yeah, if we go back to the validator page and just choose one with a like kind of a lower score here, and scroll down to this tick distribution. So this one looks way different, right? So you can see there's a 6 millisecond time slices here. There's not that much green in the beginning. There's kind of some like blips of green here, and then all the green and all the transactions are at the end. And so when we started looking at the data, we're like, whoa, I think we like knew some of this was going on. People certainly that are like super in the weeds have been chatting about it for a bit. But when we like started talking to the average person on Solana, even some validators, they didn't really know that this was going on. And so we're like, oh, we should probably like build a dashboard and educate people on this. And so that's essentially what we build. And, you know, you can poke through a lot of blocks on here. And we try to come up with like some rough scoring algorithm to score the blocks and how they're built.
Yeah, I guess maybe just at the high level, if you can talk through, you talked a little bit about the transaction packing, and we kind of, you know, we looked at the chart there for a couple of validators and some of those slots. How does this kind of break out in terms of this IBRL score, the slot time score, and the transaction packing?
Yeah, so this is kind of the first like iteration of this. You know, we wanted to get it out. If you go to the methodology tab at the top, it kind of breaks down how the score is achieved. And so yeah, there's a 35% slot time score, 25% vote packing, 40% non-vote packing score. And so slot time score, it's basically like how long your slot is. So if you are, I can't remember what the exact number is. If you're like over 380 milliseconds for a slot, then your score kind of exponentially decays the longer it goes. Why 380 instead of 400? Well, the default slot time in Agave is actually the main validator client Solana is 360 milliseconds. Everyone says 400 milliseconds, but it's actually 360. So you can see like if there's Agave validators that are running more than like 380, some are running like 400 or 440 millisecond slot times, you know, they're modifying it to basically stretch their slots out. And what that does is like, if you're more time as a block producer, you have more time to kind of ingest and get all these transactions and produce higher fees. So that's 35% of the score. The other 25% is the vote packing score. So basically this incentivizes, this is showing like how votes are packed within a particular block. So we saw instances of, we can find a few examples of these later, but we found instances of like people packing votes late for some reason. And basically that just like delays the confirmation time. Like if you go to a website in Solana, you make a swap, you're waiting for that transaction to confirm. If people are packing their votes late, then that kind of delays the update on the UI for everyone. The other 40% is non-vote packing score. This is just like user transactions, swaps. And it's kind of like, it's a little complicated, but basically it's like trying to incentivize packing throughout the slot. So just trying to incentivize like the packing of transactions throughout all the 64 ticks instead of just at the beginning or just at the end. And so this is kind of like we try to be like as detailed and share as much information to the score that we can. The scoring will be open source at some point, but and this is just a V0 of it. I already see there's like some instances where we kind of need to like tweak some of the parameters for it. But yeah, it kind of just gives you like a rough idea of like what is the score and how's this validator doing.
This is like, first of all, this is incredible. The visuals are really great. I do have a question. Like, as we saw, like for instance, in the Helios visual, like it's quite uniform the way they like submit the non-vote transactions, whereas with the Galaxy example, they waited until the end to submit all the transactions. Like the obvious implication of this is that latency is like reduced in the Helios case and not in the Galaxy case. But what is like the incentive for Galaxy and others to like wait until the end of the block to submit all the transactions?
So yeah, it essentially there's a incentive for validators to earlier I was talking about validators can process transactions throughout the slot and propagate them, and that's what we see in Helios. They're propagating it throughout the slot. But if you essentially if the challenge is that Helios might get a bunch of super high paying transactions at the end of the slot, and they're like, oh, I can't rewind time and like fit these in because I've already filled up my compute units for this block. So there's essentially incentive today where it's like, well, I might as well wait till the end and see everything that I can and then pack my block. And that's not super great for Solana. We want to be the decentralized NASDAQ. We want high frequency trading to happen here. And if that's kind of going on, it's not super great for that vision.
Gotcha. So it's essentially like sitting around and waiting to see at the end, and then filtering out like what are going to be the highest paying transactions, and then stuffing all those in and basically dropping the rest to the next block.
Yeah, there's actually some let me see if I can find an example of this. There's some other like kind of interesting side effects from this too, where if you're packing, how do I say this? Helios is packing throughout the slot, so every validator is like able to replay that live and like be essentially caught up with the chain and like be on the very tip. But what we see in some of these validators that are packing towards the end of the slot is it actually causes every other validator on the network to briefly run behind for a bit because they are just catching up to all this work. So yeah, if you like pull up one of the validators that has like a low pack score, if you look at their votes, some of the votes are actually like kind of shifted towards the middle of the slot because all the other validators, they're trying to like play catch up and like process that giant chunk of work. And so yeah, there's been some like interesting stuff that we've kind of like, it makes sense when I explain it, but it's not something that would come to mind when you like first see this. So yeah, you can see here, if you go to previous, so this is slot 750. You can see a bunch of these transactions are weighted towards the back. All the green stuff is kind of weighted towards the back here. And then you go to next, hit next there. So then you can see this is the next slot, and a lot of these votes are kind of like shifted more towards the towards like the middle of the slot. And so that's kind of showing the side effect. This isn't as severe because they kind of like spread it out through the last few ticks, but for these ones, like go to like, if you go back to validators and go on like the second validator page, and then go to like Coinbase 02. Yeah. So yeah, this one's running the harmonic validator client. And so you can see here that there's a lot of votes that are kind of like shifted 100 milliseconds in, and all the non-voting transactions are emitted in a single tick here. So yeah, there's a lot of interesting data going on in chain. I feel like none of the current explorers like went into this level of detail. It's like, here's all the transactions, and there's no like really tight timing data on this.
Gotcha. These are interesting because I think, yeah, to your point, I would say that this is data that otherwise would have had no clue about prior to a dashboard like this being kind of readily available. I mean, I guess you called out some trends. Like, do you think now that the data is kind of readily out there and the community can jump all over it, is there an opportunity here for sort of like a kind of period of optimization to sort of work through?
Yeah, for sure. Yeah, I think it's kind of like the slot timing stuff that happened maybe like beginning to mid of 2025, where there was a bunch of validators that started lagging their slots to like 420, 440, 500. Some are even going way above that. And like ultimately it was a protocol issue that some validators were just kind of taking advantage of. But when we saw dashboards that were released that showed all the slot timing data, validators extending their slot times. A lot of validators took that back and like tuned it, and they kind of got like socially shamed into that. So people, there's data here. We kind of took like a first pass at scoring. People can kind of come to their own conclusions on it, but yeah, I think that the goal is like, hey, here's more data, and people can look at it and try to figure out if this is like something we should be optimizing for or not.
Do you think I saw Carlos shot over a tweet for me from Benedict Brady kind of commenting on the dashboard saying that a lot of, maybe fixes or sort of changes to how, block packing and TX packing are handled could be brought in protocol via future upgrades.
Mhm.
Do you think that's sort of like the optimal solution here?
Yeah, I think what he's talking about specifically is MCP, so multiple concurrent proposers that will bring block production into protocol. I think that's inevitable. The timeline for it's unclear, depending on who you talk to. Some engineers at Alonza say 6 months, some say like 12 to 18 months. So I think the timeline for that is unclear, and um, I think it's inevitable. It's going to happen, but I guess it's just like, what do we do until then? And we think that um, like hopefully we can avoid these games taking place at basically these validators are like kind of chasing yield at the detriment to the execution on the network. And so, we hope that this will kind of slow it down. And we're pretty bullish on BAM as like the near term solution to this, trying to essentially make everything more transparent, more deterministic, not really optimized for these like yield chasing games and focus more on the execution. But yeah, I think that it's Anatoly mentioned MCP in his white paper, and that's like Anatoly's baby and Max's baby as well. So I think it's inevitable that that happens, but the timeline for that is kind of unclear right now.
Yeah, I guess while that is implemented, like I don't know if it will happen like in the next 12 months or whatever, like we really don't know. But do you expect like social shaming, let's just call it, like to make these validators change their behavior, or do you expect like stake to meaningfully change based on this scores? Like, do you think people will unstake from X validator and deposit into a validator with a higher score, or you just like don't know?
Potentially. I mean, it's like the when people didn't really know the slot time lagging was happening until people built dashboards, and that kind of at least mitigated some of it. And then there's all the work that Ghost Logs have done with sandwiching. And there's been a lot of stake that's been removed from that. Ghost Logs is a website called it's sandwich.me. So it's showing validators that are sandwiching transactions, like users swapping tokens. The amount that's happening has gone down a ton since they released their dashboard, because like validators are getting smarter and like getting shamed. The users are getting smarter as well. And so, yeah, the goal is to like highlight this information that this is happening, and people can come to their own conclusions on it. Because I think that we can't really expect all stakers to be as sophisticated as those that are like super deep in the weeds on the networking things. Like we talk to the ETF issuers and people that are running super large hot air companies, and when we explain this to certain people there, that a lot of this just kind of like goes over their head. It's okay. They don't have to be in the weeds on everything here, but I think building data or like visualizing data like this is helpful to kind of help them make better decisions and help stakers make better decisions.
Yeah, exactly. Like I would assume like validators with a heavy institutional stake do not really like be affected by this. Uh but more so with future network upgrades. You mentioned like BAM could potentially help with this. Like, I'm curious if that's because of application controlled execution or any other like variables that BAM introduces.
Yeah, that, and then just the like the verifiability of the sequencing. So knowing what sequencing is happening and when it's happening, and just being like super transparent about that, and not really trying to. We don't really want to play those games, like these kind of like yield chasing games. At least on this, like uh, in this dimension. I think there's other ways to play these kind of games to grow the pie versus like trying to play slot timing games and late packing games.
Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research.
One question that comes to mind from my end is like, we've talked about like MCP, we've talked about BAM. Like, do you think that reducing slot times could potentially help with this, like halving the slot time?
Yeah, I think it helps mitigate it to a point. So yeah, if we cut the slot times in half, then you will likely still have people that try to play these games, but when we're showing like the single tick packing, like this super tall vertical green line, right now that's happening every like 350 or 400 milliseconds. So if you half slot times, then you would probably half that too, which seems like a step in the right direction. So yeah, I think that shortening slot times and making the slot times more deterministic, which should come through Alpenglow later this year, will be helpful for these. Alpenglow will help with the slot times. The late packing stuff, it's like I think you just need to show data and then explore some potentially in protocol options on like a super long time horizon. But that stuff takes a while to ship for sure.
On cutting slot times, like what do you think is the limitation? Like, I'm assuming at some point you kind of run up into a wall for the the hardware for the network to kind of operate at kind of smaller slot times.
Yeah, there's probably some like data propagation changes that you could do to help shorten slot times. So yeah, I think there's one change where like you basically propagate shreds like the mini blocks faster. Maybe you could potentially use something like 00 to like multicast them out so the validator isn't constrained by networking. And then past that, there's some other stuff that might come like async execution, which I think Alpenglow is a requirement for that. But with async execution, you should be able to get much shorter slot times. So yeah, I think there's some engineering stuff that can be done to fix this.
Yeah. And what are the like second order effects of solving this? Like, let's say we reduce slot times, we implement MCP, Jito BAM is widely adopted in the network. Like, what will you see change from the user's perspective or from a market maker's perspective or like, yeah, from the end user?
Yeah, I think that users will get better pricing and market makers will have more certainty over how their transactions are ordered. When we first found this data, we talked to a lot of market makers on Solana. So like, all the big ones you've heard of, we talked to prop AMMs, and they had no idea that a lot of this stuff was going on. And we're like, oh, this explains actually a lot of what we're seeing on the network with like some specific validators. So, when those things are implemented, then it will just give market makers better certainty in the comfort to quote tighter, and ultimately that will result in better pricing for users.
Yeah, I wonder if you think, or how you think transaction landing services come into play in this. Because for instance, like I'm thinking of Humidify, which is closely benefits from Nozomi, right? Or there are other transaction landing services on the network. Like, do you think this will remain like relevant going forward?
Um, I, I mean, I think this. I guess we're kind of like the first transaction landing service, but I do think on a long time horizon, it's kind of a commodity service. I think so. I think we'll just see those kind of. Uh, there need to be like new business lines for them. Because in the past it was really hard to land transactions, and the current state of the network's like not super great with all these transaction landing services, because there's like there's probably like 10 transaction landing services, and so people will send the same transaction to all 10 of them. So if you actually like look at the validators and the number of transactions they're getting, there's a ton of duplicates. But also there's something called durable nonces that people are using, where they basically only pay the fee once. So what they'll do is they'll be like, oh, Danny has a transaction landing service. I'm going to send my swap to him and tip his address, tip his like business account, because he's going to try to land it. And I'll send the same transaction, or a different transaction with the same durable nonce to Carlos in his landing service and tip that. And both of those make it to the validator, but only one can win. And so there's a ton of like duplicates of the exact same transaction, but also there's duplicates of different transactions with the same nonces that validators have to filter through. And yeah, it's just it's causing some interesting kind of side effects on Solana networking and the scheduler and everything, because you have all these transactions that make to the validator that are just never going to land, because like people are sending the same thing to like 10 different parties.
Yeah, I wonder, like I'm like going on a tangent here probably, but like the goal of SIMD 96 was originally to like cause these transaction landing services to drop. And I've seen from the data that priority fees have been a bit more favored like in recent months. Do you expect that trend to continue and like MEV tips to
Yeah.
decline over time?
Yeah. I think the one thing that I'm not the biggest fan of with SIMD 96 is that none of it goes to the stakers in protocol. SIMD 123 was approved, and hopefully that gets rolled out this year. Because ultimately, like the stakers are giving their stake to the validators to give them the power to produce blocks, and the stakers should see some of that revenue. Doesn't have to be all of it, but it should be some of it. And there's no in protocol way to do that. Yeah, we just haven't been spending a bunch of time trying to optimize tips right now. So yeah, I think that the amount of priority fees the percentage of them compared to tips will just keep going up.
Maybe to kind of close out the discussion on the IBRL dashboard, I guess, Lucas, kind of just want to give you the floor, like going forward here now that you have this V0 out, and I think this episode will be out a few days after it's already been publicly announced as of the airing. But I guess what will you be looking to kind of refine there, and maybe dig a bit deeper into the data to find solutions for?
Yeah. So yeah, I think we will probably be like tweaking some of the scoring parameters a little bit. So keep an eye out on the website for those, and we'll probably announce those as well. So yeah, trying to tweak the scoring for some of the packing stuff. And there's a ton of other interesting data like grouping by client ID. There's definitely some like specific validator clients that are not packing blocks in a super favorable fashion. So being able to group by that. And then, yeah, there's a ton of other data that will look into like account locks and call it like how validator is actually packing different types of transactions throughout slots. And there's some interesting like clustering that we've done to kind of like cluster different validators together, or it clusters them based on how they pack their blocks, so you can kind of get an understanding of who's doing what. Yeah, I guess whatever the community tells us to add here, we've already gotten some good feedback and suggestions on things to add to. So we're going to keep investing in that and basically building what the community wants for this.
I do I do wonder, since you listed off some things there, like I know 00 also has, sort of their interesting kind of latency dashboard, and I wonder if maybe the latency information combined with kind of the slot data might also reveal some trends that you could see.
Yeah, we were talking to them earlier about some stuff here, so I think that'll shake out to be pretty interesting. But yeah, it's been like a pretty helpful tool for us internally on BAM and just seeing like what the BAM validators are doing, because we've kind of discovered some like performance bottlenecks in it. So it's been helpful from that standpoint. And then I mentioned in the blog post, but there's just like some other interesting stuff that we've seen where it's not necessarily validators doing something malicious. It's like there's actual, like for instance, in Asia, basically every data center provider in Tokyo, in like the Asia region, all their vote scores went really bad like a month ago. And I think it's because there's a lot of submarine cables that are running fiber between countries that are down right now. And so they actually have like a kind of a not super great vote score, because there's actually like worldwide networking issues. So we've been talking to some of the data center providers on like, hey, what happened here, and are trying to help them figure out what happened and fix it. So yeah, it's kind of just there's a lot of data to kind of grok on the Solana blockchain, and we'll kind of see where the data takes us.
Cool. Love it. We will stay tuned and stay updated on what's going on in the data. I think we couldn't have Dan Smith today, but I know he's going to want to geek out on a future roundup as well. So we'll probably dive into some more examples of that data as well. Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Jumping along to, I guess, our back half of the episode, second conversation to dive into. One that I think we've had probably plenty of times on Blockworks podcast, but wanted to talk about it again since it's been so hotly debated again, the buyback debate. And I think probably the broader debate here is like more of a growth versus buyback debate. But generally speaking, there has been this ongoing question of, should a crypto protocol, should these early startup protocols be turning on buybacks, buying back their tokens with revenues? I think a bit more of a heated discussion got kicked off recently with Helium, the HNT token, as well as Jupiter, both talking about, I think within the same week or a few days, saying, considering turning off buybacks, or we're going to stop doing buybacks of the token. They either haven't had an impact on the market, or in hindsight, maybe it was just a waste of money. I guess I maybe just a level set, like what are our general thoughts on like this, doing buybacks in crypto with some of these early stage protocols, or buybacks versus growth? Like what are our thoughts there?
Yeah, like I can take a first stab at this. I think the main reason like protocols do buybacks, like as a general rule, is to just send a credible signal to the market that they care about the token. And the reason for that is that there's no other way, or there wasn't any way to do that like 6 months ago, other than doing buybacks. So I think Pump is probably the most clear example here, where when they launched the token, like people were really like unsure about how value accrued between the Labs entity and the Pump token. So they started like buying back 100%. They started to buy back the token with 100% of the revenues. The problem is that they're essentially like destroying capital to some extent, in the sense that that buyback is programmatic and they are buying back the token regardless of the market cap or the PS it's trading at. And also like it's unclear to me if the market is actually rewarding tokens that are doing the buybacks. As we've seen, like with Helium and Jupiter, I think part of the reason they're trying to, or like proposing stopping buybacks, is because the tokens are like down 80+% from all-time highs, and we haven't really seen like the market reward that activity, and that money could have been used otherwise for growth or other initiatives. But yeah, curious like to hear like actually from Luca's perspective, what he thinks of all of this.
Yeah. Yeah, a few months ago we went like super deep in the weeds here. So we added buybacks a few months ago. It's unclear if that really affected the price. I think it's hard to make that distinction. And it's kind of, and then we were kind of, we've also just discussed like a staking model as well. So you can imagine that's kind of like another alternative here where you provide value back to stakers by kind of taking some of the revenue and redirecting it to people are staking the token. Yeah, I don't know. I think it's kind of hard because like on one hand you want to like I'm here for the long term. I think most builders are, and you want to reinvest in growth. That's like the most important thing. You don't see startups that are like buying back shares or like high growth tech companies that are buying back shares. They're kind of like reinvesting in growth. But at the same time, it's like you have a market that's trading based on a few factors, and maybe people are counting buybacks in there. So you kind of have to like balance the two. And I guess the other point is like, I feel like buybacks are good investments when the market doesn't care about them. Like right now, buybacks are probably pretty good because token prices are depressed a lot. You're buying back tokens for pretty cheap, but no one really cares about buybacks right now. Like they're trying to find whatever the hot narrative is. And, like many months ago when things were super hot and you had like some dexes on Solana and other protocols that were buying back the token, like when they would announce that, it would have a big impact on the price. And people seemed to really appreciate that. But the token price was like super high at that time. So from the investment standpoint, it's not super great. So those are kind of my thoughts on it. Like, I don't know if I'm like for it or against it. I think I'd probably be for it in like a market like this, but I think it also depends on the phase of your project. Like we actually just put out a JIP Jito improvement proposal. I think it was like 2 weeks ago on pausing buybacks and using the revenue for growth. So yeah, I think we're kind of in growth mode with BAM and like would rather spend the money incentivizing the adoption of that versus continuing to buy back JTO. But that will like probably change in the future depending on what phase we're in.
Yeah, I think you both raised great points. I think Carlos, you started off with this idea, and I think we talked about this quite a bit, honestly, on 0x as well as Lightspeed. Like this idea that for many protocols, like just announcing or committing to a buyback was kind of this like good faith way to signal that the token wasn't just like a meme coin, I guess. But it almost became like a bit of a requirement from the market of like, well, if they're not going to, if the protocol isn't going to announce a buyback, then why would I buy the token, or why is the token price going to go up? And so then it kind of became like, a necessary card to even play in the game, so to speak, like over the past maybe year or so. And so then we just saw kind of like, in large part, a big chunk of, all revenue generating protocols kind of committed maybe in some form or other, or at least talked about, at some point, hey, yeah, we'll probably turn on the buybacks. But I think the nuance kind of went out the door when it was just sort of like, well, you either have one or you don't. And if you do, that means you like your token. And if you don't, it means you don't. And I think that kind of sucked the air out of the room a little bit. I think, yeah, Lucas, it makes a lot of sense from your perspective, like really just thinking about the question. In my mind, I almost wonder, to some extent, it it makes sense to consider like the ramifications of, if you're not doing any sort of buyback and the market's going to heavily penalize you, then, that might limit your potential future runway from, if it's sales of tokens to third parties or investors. So in some extent it makes sense, but to your point, like let's say that you're actively trading like maybe well above or beyond any meaningful or like reasonable valuation, and you're buying back, hand over fist, then yeah, you might just be kind of destroying revenues at that point. That would be better spent, if there's credible ways that you can grow the protocol.
Yeah, I think it's not, it's in the decision to do this, it's a two-way door. Like you can do it and then roll it back. So I think that's important for at least protocol founders to understand. I'm sure the investors have mixed opinions on it, but like we talked to our investors and they're okay with the decision that we made, and there might be some investors that don't like that. So I think it's definitely a two-way door where you can roll it back or change it later. I think there's a lot of experimentation going on right now, which I think is pretty good.
Yeah, I totally agree with that. I wanted to ask you, like, because you have the perspective of a founder, if you have any thoughts on the Futarchy model, and if like Jito like potentially will be open at some point in becoming an ownership coin or like adopting like Futarchy for governance. I know like for the grants committee, I think you've used Futarchy, but will you use it like for broader parts of the protocol?
Um, we've explored it a little bit, and yeah, we tried it with some things. Um, I think we need more people participating in the Futarchy component. I'm not super intimate with like every protocol's governance, and you guys probably know more about this, but I saw something the other day on like how Sanctum tried to do a Futarchy vote for building a mobile app, and that could be it's a really big swing for them, and it could have worked out super well or it couldn't have worked out super well. But like I think the volume that traded on it was like $46,000. And from that standpoint, it's like there's probably not a bunch of participation. So I think we need more participation. Um, Ultimately, like I just want people that are well informed making the decisions on like if something's a go or no go. So I'm uh, not it's not a no to Futarchy. I think there just needs to be something needs to change about it, or there needs to be more interest or something.
Yeah, like more maturation. I will say on the Sanctum point that I think people are looking at that specific example from the wrong lens. I would argue that that should have never been a Futurkey proposal because number one, I think like product and strategy decisions should be left to the core team. I don't think there was a reason to put it off for a vote. And number two, like they were not touching cloud community funds in any way. So from that perspective, like from those 2 points, I think like the mistake wasn't like sure like there was low volume traded on it, but I think the first mistake was actually putting that up for a vote.
Yeah, I think it makes more sense for the like do we buy back or do we buy back and burn or do we add staking? Less so for those like product decisions for sure.
Yeah, I think this makes a lot of sense. To me, I would agree with you completely, Carlos, that a lot of these, I don't know, like operative and executive decisions should not be going to community governance forums. Like you're the team that's built, what is maybe some successful application. You shouldn't be looking to like investors to tell you like what the next product is in your category that you should or should not be creating. I think that's you're the one that has the technical expertise to kind of decide that and build that. If it's a matter of like, I guess in the MetaDAO Futarchy example, like, these teams kind of have that do raises, they have kind of agreed upon runways based on the model. So if they need some more funding, like sure, put that funding up for a vote. But in terms of like what product to build, what strategy to take, definitely like that should be, I want the founder, I want, the co-founders, I want the operations team to be just heads down doing that, not asking for permission to go build. That would be a failure, I think, of the model if that's kind of where we end up, because I think we've all seen sort of the bickering kind of failures of governance forms in the past, and even now.
Yeah, it's really hard. We our main, like, I think Jupiter is a good example of this, where they kind of went full on DAO for some things and then ended up rolling it back because there's a lot of bickering, and like it's like, oh, this person's getting paid this much. It's like, yeah, people that are good that you want on your team are really expensive, and I don't know if those things, like those salaries and compensations, should be public. And like people that aren't founders or don't have experience with that maybe aren't the best decision makers for like salaries and things like that. But for token prices or for other decisions that are more closely related to the token price, then Futarchy might make more sense.
Yeah, I totally agree with that. Like, I think basically what we're saying is that Futarchy, like, we are constructive on it, but should be confined to token holder protections. Decisions such as, should we unlock investors early? Yeah, that should probably be proposed via Futarchy. Or should we use the Jito community funds to do X or Y and Z? Like, yeah, that should probably be submitted via Futarchy. But like, imagine if you had told the market like, hey, should we do BAM? Like, it doesn't make any sense, right? That's something like you should do, like, on, like, you have the expertise on that subject.
Yeah, and there's some like secrecy and like strategic importance of not just telling the world what you're going to do. But I think I'm not bearish on it long term. I think maybe it needs like better packaging or more education or some like tweaks to make it super successful.
Yeah, and I guess the other problem that we've kind of skipped over with the buyback thing is this. Some of it is a bit downstream of the other issue of like the equity and token relationship that many protocols, it's like unclear what's happening there. I think obviously Futarchy MetaDAO has improved some of that for new protocols that have launched via them, and sort of this like token only approach. Coliseum and MetaDAO just announced their stamp product, which is essentially like an opportunity to convert like a safe plus token warrants to a token only approach. So it kind of removes that question mark. And we've seen some teams, I can think of Morpho. I'm sure there's others who have sort of like unified their structure all under the token entity, so that you sort of eliminate that conflict as much as possible. I think that's been like a core driver of this conversation, is like really downstream of it, of we're not sure why we should own the token because the equity exists and they've been getting and maybe it's been getting all the benefit behind the scenes. So tell me why. And that reason why has oftentimes been buybacks, but that hasn't really addressed the core issue.
Yeah, there's another interesting model I saw a few months ago, I want to say, from Rainbow. So I think what they do, they like they have equity and token, and I think they transferred 20% of the company equity into the foundation. So kind of another interesting model. Like, it's kind of hard to unwind it at a certain point. But yeah, that seems like a step in the right direction as well. But I think that, like, if you're launching a new protocol, at least in the US now, I think there's a lot more freedom on maybe you don't need to do what's been done to kind of like protect against like harsh regulatory environment.
Yeah, regulations are a lot more favorable now. Like, I would like to ask you something about BAM, like moving on from the buyback debate, if that's okay. Like, one of the initial like use cases for BAM was advertised as Drift adopting it, like for their perps model. Like, I saw that recently Phoenix is proposing to launch a new perpetuals protocol using like the prop AMM architecture behind it. Are you like constructive on a prop AMM for a perps protocol, like instead of like application controlled execution to prioritize cancels? Do you think it can actually work? I don't know. Do you have any thoughts on it?
The prop AMM model?
Yeah, for like perps specifically.
Oh yeah, for sure. Yeah, those guys are super smart. I talk to them a lot, and kind of have got some alpha on like the way that it works. It's pretty interesting. I think it's, if anyone can pull it off, it's these guys. So I'm very confident that these prop AMMs will work. It'll look slightly different from like the prop AMMs that we see today, because it's kind of like today it's like the application and the market maker are the same party. So like Humidify is the application and the market maker, I guess the entity behind Humidify, and like Tessera, it's the same. The Wintermute for them. So I think if you want, I think theirs will be slightly different, but it'll still be a prop AMM behind the scenes. And there's the prop AMM model is just way superior to Clobs, because you can just encode a lot more information in a much smaller message and much smaller compute than having like a Clob that has all these tick sizes that you need to adjust for.
I'm curious if there's still a role for something like BAM to play in this like prop AMM designs. I mean, I know a lot of it is focused on Oracle updates and the timing of those. Like, is there a sort of beneficiary like factors in using something like BAM underneath that?
Yeah. So the cancel in market making before takes is like one thing that BAM is useful for, that we're talking to a lot of the perp dexes and prop AMMs for. And then there's other stuff too, like when there's like super high volatility, these perps platforms run the risk of having bad debt. And so you basically need to make sure that those liquidations get in as fast as possible. And so that's kind of another use case where I think BAM can definitely be helpful on trying to keep these protocols solvent.
Yeah, that makes a lot of sense. I have a question. I don't know if you have the answer for this, but do you think prop AMMs can potentially enable price discovery on chain?
Yeah, I don't see why not. I think we're like kind of seeing this in some sense. Like I think some prop AMMs have started quoting like OR, which I don't think OR has a sex listing, at least to the best of my knowledge. I don't see why not. Like Clobs, I think we all know that Clobs can support price discovery, and so Clobs just like another market. So um, I think they for sure can do it.
Yeah, my question is because like I think the main use case, or like one of the main like applications of prop AMMs is like arbitrage, right? Like capturing the arbitrage between sex and dexes. Or is a great example where you don't really have like a sex listing and still you can list it on the prop AMM. I assume they are capturing some sort of arbitrage between dexes though. But yeah, like it has always been like kind of this question for me if prop AMMs, because they kind of rely on Oracle prices for pricing, right? But I maybe they can like have some algorithm or whatever to like update their pricing faster than even Oracle's. I don't know.
Yeah. The all the prop AMMs, they like take all the centralized exchanges, the main one being Binance, and like you have like Coinbase and Bybit and these other large ones, and they kind of run it through some fancy algorithm, and that's how they update their curve. And so the main difference with price discovery is that you don't really have those sources of like I guess like right now the sexes are kind of just like a better truth of the current price. Um, so yeah, there's definitely a lot of work that has to be done for price discovery on chain from like an infrastructure layer, but also on the actual like prop AMMs and market makers. So yeah, I think we'll see more and more of that in 2026. So pretty excited about that.
Yeah, I think that's definitely the case. Certainly from kind of the early successes we've seen, and just I don't know, some clamoring I've heard for more teams kind of enter this space and maybe specialize in certain areas. I think we've certainly seen the, focus so far around like the Sol USD pair and some of the largest pairs on Solana. So probably see some diversification there, and like niched specialization of these different prop AMMs that focus on maybe types of assets, especially if you see more, if equity perps become more of a thing, or commodities and other assets trade on chain, then there's certainly tons of existing expertise on how to price and trade those assets from TradFi.
Yeah, where do you guys see centralized exchanges going in 2026, especially with respect to on-chain trading?
I think Danny's 2026 thesis was really good here. I don't know, Danny, if you want to go through it.
Yeah, I'll share. I guess I had a thesis for 2026. I think what we've seen this past year in 25 for Solana was maybe like the early innings of it sort of kind of evolving into like what is essentially its own kind of exchange at this point. I think what we've seen certainly as well, like from the broader Solana community, there's like more of a focus and push lately around, okay, let's make sure we get all of these assets, natively listed on chain. Let's bridge them over. Let's make them available day one, TGE, ICO, to immediately be traded. There's been a big push in perps land, and you've got a lot more teams trying to build new perps products, and obviously prop AMMs have been at the heart of that. I think a lot of people talked about Hyperliquid as like the on-chain Binance, and I think what I'm seeing, and I think probably what we're seeing is really like Solana becoming like the on-chain sort of everything exchange, and I'm expecting like the gains and success that have been seen for like the Sol USD pairs to trickle down to other like larger assets, and expect to see more growth there. Not that necessarily, I mean, maybe trading volume will flip Binance, for example, like in totality, but in terms of like active use, I think we'll probably see like another tick up, generally speaking, of like this on-chain to like SEX or off-chain trading venue like dominance.
Yeah, I totally agree there. I think like probably if you look at Monads TG, that's probably a great example of what we can expect in the coming year, where it was the first time Solana listed a non-native asset like that was highly relevant in its like first day of trading, and it did more volume than Hyperliquid. If Solana had been like a centralized exchange, it would have been the 5th largest centralized exchange by trading volume. I think Solana has gotten to a point where the infrastructure has matured enough, both in terms of like bridging, in terms of like prop AMMs to support trading. In the coming year, we'll have like BAM, we'll have MCP, whatever, to like support like better pricing of assets. So I think we'll see like increasingly tokenized equities and other types of assets, not just like crypto assets, trading on Solana. Like I think one question for Lucas that just came to mind is like, do you have any kind of 2026 predictions?
Yeah, I think it's kind of what Danny was saying, but I think that sexes will probably just become more similar to embedded wallets, where embedded wallets like Privy and like I think Turnkey and some others, they just like custody user funds in a super safe way and give them access to any chain. We kind of saw this with the Solana in Coinbase announcement, where you can trade any asset on Solana from your Coinbase wallet. I think it's going to be hard for new assets to be listed on, like the barrier to entry to get listed on a DEX and just be running is like super low. And I think that all the paperwork and whatnot that you have to go through on a SEX is just like going to slow things down, and they're going to miss potentially price discovery from a lot of assets. So I think it's like maybe Coinbase is like your on ramp, and then you just use it. It's like a branded front page for DeFi.
Yeah, I think what really ties into that as well is like we've seen, you're seeing exchanges become more like wallets, and we're seeing wallets become more like exchanges or like these platforms, basically. I think Phantom, and there's plenty of others that are like good examples, but they've gone from like hold your assets here to now like, you can trade here, you can do prediction markets here, you can do perps here. Like they're building out that wide kind of product stack that you'd expect from like a centralized platform. And so we're seeing like those two sides of the ocean kind of merge. And for Solana, maybe the benefit of like the way that the ecosystem has grown up is that, due to the DEX aggregating kind of like dominance on Solana, there's been this, as long as an asset gets listed somewhere, it's like the end user doesn't matter what they're using, but they have access to it and they're trading it pretty seamlessly. Jupiter or DFlow or whoever is routing it to them, and it doesn't matter if they're using Phantom or Soulflare or some other even non-Solana native wallet. Now it's Coinbase app. Big question mark for me is probably like, will you see, Binance is still so massive and like this dominant force. Will they kind of expand outside of their sort of walled garden, I guess you could call it that? Because they have done some more, some similar advancements in terms of like, let's do some more integration between Binance and, the BNB chain. But they've not done as much as Coinbase has, for example, to, let users trade on Base, let users trade on Solana. I'm sure they'll expand that even more. It'd be interesting if Binance were to start taking steps like that, because I think that would be really indicative of like, okay, there's no turning back. Everyone is just going to start adopting things that are on chain and integrating them into their products. Cool. If there's no other thoughts, I think we can call it there. That felt like a little bit of a mic drop. So Lucas, appreciate you so much for coming on today. I know we had you a few weeks ago to kick, or maybe a month or so ago, to kick back off the Lightspeed show. So glad to have you on again. We'll be looking forward to seeing more updates and details coming out of the IBRL data. I think that'll be interesting to dig into and get more details there and see how, it can improve the network and validator performance and TX packing going forward. And Carlos, pleasure as always. Thanks for coming on, gentlemen. And until next time.
Thanks.
See you.